Our global direct investments made up 38% of our portfolio, with 10-year IRRs of 7.6%. This year, our GDI delivered strong realized gains from key divestments, including Schneider Electric India and GAXX. The mix within GDIs is 63% listed and 37% unlisted. Over the past decade, our unlisted positions have outperformed, generating annualized returns of 10%. This reflects the value we create in private markets through active engagement with our portfolio companies.
Our focus is on key markets that provide opportunities at scale. They help us build a portfolio that can withstand shocks and perform across different market cycles. The US remains a key market for innovation. AI is the defining structural theme there across infrastructure, cloud, as well as applications. Our stance is constructive, but actively risk managed given valuations, the cyclicality of the market, and macro risks. In China, we are focused on innovation and domestic resilience rather than waiting for a broad consumption rebound. We see opportunities in biotech, robotics, AI hardware, the energy transition, as well as local consumer champions that can gain share in a more moderate growth environment. In Europe, our focus is selective. We invest in globally competitive companies across industrials, the energy transition, core plus infrastructure, luxury, and defense. India remains a key long-term market despite near-term headwinds from energy prices, supply chain disruption, and currency movements. We stay constructive on resilient domestic sectors like healthcare, consumer tech, and financial services. Across all of these markets, our discipline is the same. We continue to sharpen our investment selection, capital recycling, drawing on deep domain expertise to evaluate opportunities and underwrite risk. We have the flexibility to take minority positions in quality businesses or selective controlled stakes in global or regional leaders. What stays consistent is our discipline. We conduct periodic value tests on all our investments, deciding whether to increase, hold, or sell. We invest with conviction when the fundamentals are strong, and we still believe in the long-term opportunity. That balance of conviction and discipline is what staying power looks like for us.
TGI focuses on building a strong global portfolio with a higher risk-return profile relative to TSG and TPS. Our focus is on select larger opportunities with emerging and established market leaders. Examples of investment focus areas include AI and core plus infrastructure. We will also continue to grow our exposure to industrials, healthcare and life sciences, and areas aligned with our structural trends. In the listed markets, we are scaling up our public market capabilities, giving us greater agility to respond to changing market conditions. In unlisted markets, we focus on active value creation in select larger assets where we can engage deeply over the long term.
A good example is Gate Group, the world's largest provider of airline catering and hospitality services. We first invested in 2018, became a co-controlling shareholder in 2019, and stood by the company through the COVID disruption. We've worked closely with the board and management on governance, operating performance, and their financial position, and most recently on a comprehensive debt refinancing. Today, with travel demand recovered, Gate Group is delivering strong performance with revenue and EBITDA now exceeding pre-COVID levels. It underscores the value of staying power and steadfast partnership through an operationally volatile period.